Alright, what's up everybody? This is Scott here again with a brand new video to help you learn how to trade, invest, and master your finances so you can apply that knowledge in the real world and multiply your money. And what I have here as usual is my next installment of my live option trading series where I show you all the trades and all the adjustments I made over this past week. Now this week here was a bit light in terms of the new trades I put on, only 2 new trades, and both of my new positions in AMD and Twitter were over earnings announcements, and so far they've been doing pretty darn well. So that's going to be the main focus of this video. You're going to see every little detail in real time of how I traded the earnings announcements for Twitter and AMD. And then also on top of that, you'll see how I've been adjusting my Snapchat position. This one here has been giving me a pretty hard time. In addition to making a few other adjustments in my EWZ position, which you can see I did this morning, and also GDXJ. So definitely quite a bit to talk about in this video, but as always, before I do so, in case you are brand new, I just want to let you know that you can also find me on SKILLSHARE as well, where you can take my very in-depth classes on options trading and stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out, and when you sign up for SKILLSHARE using any of those links, you'll get a full 1-month free trial. And so with that being said, I'm going to stop here and play a few clips that I recorded from this past week that will show you in real time those new earnings trades I made and also those few adjustments. So let's get started. Alright, today is Tuesday, October 26th, and right now I'm going to put on 2 earnings trades, one in AMD here, and then also in Twitter in a few minutes. So both of these companies are announcing their quarterly earnings after the market closes in about 1 hour, and both of these stocks have super high implied volatility for the time being. So as you can see over here in the case of AMD, we are seeing a pretty nice spike in the implied volatility. Right now it's hovering around 49%. And this translates to an IV rank of 54%, that's pretty good, and also an IV percentile of 67%, also pretty darn good. And as I have explained in previous videos, this kind of thing, this elevation of implied volatility, or in other words, this elevation of uncertainty about AMD, this kind of thing is very typical leading into an earnings announcement. Right, especially for high-profile stocks like AMD and Twitter, everybody wants to know how these companies are performing. And until those earnings figures come out and become public, that's why we're seeing this buildup of uncertainty, which of course translates into very inflated option prices. So high implied volatility means high option prices, and therefore as an option seller, that's going to be a very advantageous opportunity to step in and start selling these options. Now, as you can see on the price action chart here, AMD has been skyrocketing as of late. And so even though I'm going to sell a pretty neutral strangle on the stock here, basically an out-of-the-money call option and also an out-of-the-money put option simultaneously, I'm going to see if I can make this position lean a bit bearish, right? Because in my view, I do think AMD is a bit overextended to the upside right now. And also, if you look back just a few months ago, the same kind of thing happened, and look what occurred not soon after. It all came back down. Moreover, as you can see down here with the RSI indicator, this one will tell you how overbought or how oversold the stock might be. And right now this indicator is above the overbought threshold of 70. So currently right now it's at around 78. So this is also a pretty clear indication that AMD is overextended to the upside and possibly due for a short correction. So with all that in mind, we'll come over to the trade tab now and take a look at the option chain. Now for this one, I could either go into the November cycle with 24 days left to go or go into December. Now the November cycle is going to be a lot more sensitive. Specifically, the options in this cycle will be more sensitive to a move in the stock price once those earnings figures come out. And also, they'll be more sensitive to a crush in the implied volatility after those figures come out. And that's the main point of an earnings trade, right? Ideally, once those figures come out, as I explained, we should be seeing a crush of implied volatility very soon after. And that's also going to correspond to a crush in the prices of the options. That's one of the reasons why I do like to trade earnings a lot. They tend to offer very quick profits because of that huge crush in implied volatility as long as the stock does not go crazy. And how do we define crazy in terms of a move for AMD stock? Well, let's come back to the trade tab here, and up here in yellow, this is the 1-day expected move for AMD based on the current levels of implied volatility. So right now, over the next 24 hours, over this earnings announcement, the market is pricing in an expected move of up or down, plus or minus by about $8. So essentially what I'm hoping for is for AMD stock to move, of course. It's definitely going to move once these figures become public, but I want the stock to move within the expected range. If it goes up by $4 or down by $6, I don't care, because I'm going to make sure the strikes I will choose for my position here will be beyond $8 away from the current stock price. So that's the first reason why I want AMD to stay within the expected range. And then also, the less the stock moves, typically the larger the crush of implied volatility you will see. So perhaps if AMD only moves up by $2, I would definitely expect to see a huge collapse in implied volatility, a huge collapse of the prices in the options I'm about to sell, and ultimately some pretty quick profits. Now for this trade, even though the November cycle, as I was explaining earlier, even though these options will be more sensitive to a collapse in the implied volatility, I'm still going to go to the December cycle with 52 days until expiration. The main reason is I simply want to collect more credit for selling these options that you can see down here in blue. Right, given that AMD is a $123 stock, I do want to collect at least somewhere around $500 in credit for putting on this position. And with the November cycle only having about 3 weeks left to go, the prices for those options, even with the elevated levels of implied volatility, they're still not that great. And so what I'm going to do here is sell the 140 strike call option. This one has a 25 delta. And then also I'm going to sell the 110 strike put option with a 21 delta. So this strangle here is ever so slightly skewed to the downside, and that's because the delta, again, on my call option is a bit larger than the delta on my put. But overall, I'm still pretty neutral on this trade. Because again, I'm not in the business of trying to pick direction. I just want AMD to move up or down within the expected amount. And so also by choosing the 140 strike call option, this strike is currently $17 away from the current trading price of AMD stock, more than twice the expected move. I like that. And then also by choosing the 110 strike put option, this strike is $13 away from the current stock price of AMD. So everything looks good here. And with that being said, we'll go ahead and right click on the call, go to sell and then strangle. Scroll down a bit here. And then down below, here's the order. Sell one contract, 140 strike call option, sell one contract of the 110 strike put option, which is going to be right there. And here we go. Total credit I'm going to receive for putting on this position is about $560. That's definitely worth the risk and also definitely worth the amount of capital I'm going to have to put up to maintain this position. Right? There's no reason for me to sell naked options on a $100 stock if I'm only going to collect maybe $50. It's not worth it. But $560, definitely worth it. And the very high levels of implied volatility right now for this stock are certainly playing a role in this pretty hefty credit. So I'll lock in a price of, let's say, $560. Confirm and send. Buying power effect is about $1,200. That's totally fine. So we'll go to send. And no fills yet. So we'll come back to the monitor tab and take a look at what's going on here. And right there is my order up top. And my current price is a bit lower than the mark price of this strangle, but I'll still come down maybe a few more pennies. See if I can get filled very quickly here. So I'll come down to maybe 558. Go to confirm and send. Send. And there we go. Just got filled at 558. Very nice. And then very quickly here, going to go ahead and set up my buying order now to buy these contracts back, ideally for a much lower price, should I be correct on this position. So down here, once again, we're going to buy back both contracts, 140 strike call, and then the 110 strike put, and I'll do so for half price. So half of 558 is 279. We'll lock in that price and make it a GTC order, confirm and send, all done. So there we go. We're all set on the AMD earnings trade. And then also, as I said earlier, I also want to play the Twitter earnings as well. So let me first adjust these charts really quick. Let me move this down. And so, wow, the implied volatility right now for Twitter is definitely very high compared to where it has been over the past year. So the IV itself is hovering around a value of about 65%. That's pretty darn high. And this translates to an IV rank of 51%, pretty good, and also an IV percentile of 81%, very, very good. So very high levels of implied volatility for Twitter here leading into this earnings announcement, which also means very inflated option prices, at least for the time being. Again, once these earnings come out, I do expect to see a very large crush in the IV, and therefore a very large crush in the prices of those options. And looking at the price action chart, unlike AMD, Twitter is pretty much just range bound for the time being. So in that case, I will play this earnings announcement very neutral. And with that, we'll come over to the trade tab here. And I'm also going to be in the December expiration cycle for this one as well. And also before I pick my strikes, we'll take a look at the 1 day expected move. Right now, the market is expecting Twitter to move up or down by about $7 over the next 24 hours. So great, I'll make sure my strikes are at least $7 away from the current trading price of Twitter stock. So on the call side here, I'll go up to the 72.5 strike call option. This one has a 22 delta. And then on the put option side here, I'll come down to the 52.5 strike put option with a 19 delta. So again, very slightly skewed to the downside, but pretty much neutral nonetheless. And so I like what I see here, and therefore we'll go ahead and right click on the call option, go to sell and strangle once again. Down here is the order, sell one contract, 72.5 strike call, sell one contract of the 52.5 strike put, which is right there. And the total credit is going to be about 290 bucks. That's a little bit low than I would like, but still for stock trading for about 60 bucks, that's definitely not too bad. And with that said, we'll go to confirm and send. Buying power effect is only 600 bucks. That's great. And we'll go to send. And there we go, just got filled at 289. Very nice. So finally, once again, last up is to set up the automatic buying order here. So going to go back to strangle, and then down here, buy back both contracts, 72.5 strike call, also the 52.5 strike put, which is right here. And I'll do so for half price. So half of 289 is about 144. Make it a GTC order, confirm and send, all done. So now we are locked into both my AMD earnings trade and also my Twitter earnings trade. So now we just have to sit here and wait until the market closes. And then once Twitter and AMD release their earnings figures, of course, we'll see what they are. And then most importantly, we'll see how the stocks react. Okay, so here we are after hours, still on the same day, Tuesday, October 26th. I just wanted to briefly show you guys where Twitter and AMD ended up once their earnings figures came out. And in case you're wondering why I'm showing you Robinhood here, it's simply because I do like to watch the earnings action take place in Robinhood. Their UI is very clean and very easily allows you to see what the stock is doing as it's kind of dancing around, trying to do some price discovery based on those earnings. And so in the case of Twitter here, this stock only moved up by $2.42. So this is well within the expected amount of about $7. And I believe, like I said earlier, this is what happens most of the time. Very often when the earnings do get released, the stock moves less or within the expected range. So based on what I'm seeing here, I do expect to see a huge implied volatility crush come tomorrow, along with some nice profits in my Twitter strangle. Now what about AMD? I'll go up here and type in AMD. There we go. So this stock is even better. Again, if you recall, the expected move was up or down by about $8, I believe, but this stock only moved down by 79 cents. So this is pretty much a home run. And alongside Twitter, I do expect to see a huge crush in the implied volatility for this one also. Now, because I did sell the December options, which are still pretty far away, my guess is I will not hit my profit target at any point tomorrow. Of course, it's certainly possible, but not likely. But still, if the prices of the options I sold can drop by maybe 25 or 30%, maybe a bit more, that would be a really, really great start to my new trades here in AMD and Twitter. So more to come on that tomorrow. All right, today is Wednesday, October 27th. This is the morning after AMD and also Twitter announced their earnings yesterday after hours. And as I showed you in the previous clip, both AMD and Twitter moved by a very, very small amount once their earnings figures became public. Now this morning, however, the stocks did actually move pretty significantly once the market opened. And so in the case of AMD here, you can see this stock actually rallied to a high of 128.08. But now this stock has definitely backed off and it's sitting at around a price of 124, which means comparing to the closing price of yesterday, AMD stock right now is only up by about $1.64. So still well within the expected move. Moreover, down here with the implied volatility chart, we are seeing the beginning of a nice crush in that IV. Although based on where it is now, I do think there's plenty more downside to come. It's just that these IV crushes over earnings can definitely take place over one full day or even a couple of days. But still, even having dropped from a high of around 50% down to around 42 in just a few hours, that's already pretty significant. And I would expect by the close of today's market that the implied volatility for AMD here will be even lower. And so in terms of the profitability on this position so far, let's come back to the monitor tab here. Here's my AMD position. And overall on this trade, I'm up by just under 100 bucks. So $100 in profit in just a few hours is pretty darn good. Especially again, I sold the December expiration cycle. So these options here are not going to be nearly as sensitive to that IV crush than, for example, the November cycle. So ultimately here, I still do have a ways to go to reach my profit target, but these earnings trades allow you to get a very quick and nice head start from the very beginning. Now, what about Twitter? Let's come back to the charts real quick here and go to TWTR. And so like AMD after hours yesterday, Twitter was up by a very small amount, well within the expected range. But this morning, unfortunately, unlike AMD, this stock has moved significantly and has not reversed. So currently Twitter is down by about $5, $5.13 or so, still within the expected range though. Right, if you recall from the previous clip, I believe the expected up or down movement for Twitter was about $7. So moving down by 5 is still not a big deal, but of course, it would have been nicer if this stock stayed up by that $2 or so that it was after hours yesterday. That being said, this position is still looking really good. If we come down to the implied volatility chart, look at this huge crush in the IV just in a few hours. It went from a high of around 65% down to 45%. And again, just like AMD, I do think there is still a lot more room here for the IV to contract further. So ultimately with this trade, we still got a very nice IV crush, and Twitter so far is within the expected amount. And therefore, if we come back to the monitor tab here and down below, this is my Twitter position, come over to the right. And also on this one, I'm up by just under $100. And for this trade, I am definitely much closer to hitting my profit target. In fact, if we come up here and right there is my order for Twitter. This is the closing order that I set up yesterday. So my closing price is $1.44 on a per share basis, or I want to buy these contracts back for a total of $144. And right now the mark price for that strangle is $192. So definitely got off to a very nice head start on this position. And you never know, perhaps by the end of today, if Twitter can bounce back up a little bit and if the IV can contract further, I might actually be able to hit this profit target by today. And if not, then assuming Twitter does not go crazy in the next few days, then definitely maybe perhaps this week I can reach this profit target. So there we go. I'm very pleased with the earnings trades on Twitter and AMD. Plenty more earnings trades to come as well. And then finally here, I do want to mention what happened with Snapchat this morning. So Snapchat is definitely being a pretty big pain in the ass right now. If we come to the charts, we'll go to SNAP. And let me move these charts down here a little bit and zoom in. So this stock unfortunately has continued to move lower. And now it is well below my put strike, which is not a huge deal. But this morning, as you saw with all those Snapchat orders, it was bouncing through my put strike over and over and over again. And in case you did not see my live option trading video from last week and missed when I put this position on, we'll come to the trade tab here real quick. And so this trade started out as simply some short naked put options at the 55 strike. And specifically, I put this one on right after this huge massive down move after Snapchat's earnings. And in particular, I thought this red line that I drew in, I thought this would act as a pretty significant support level when this big drop happened, but unfortunately I was wrong and Snapchat continued to move lower. Now, normally that's not a big deal because once my short put strike gets breached, I can just short 200 shares of Snapchat here. 200 shares for the 2 contracts I sold initially. And in that way, even if I'm completely directionally wrong, if Snapchat goes down to 40 by the expiration date, it doesn't matter. I'm totally covered on my obligations for these put options, and I'll still get to keep and walk away with the premium. The issue, as I explained, was Snapchat unfortunately was bouncing through my strike over and over and over again. And this forces me to have to short the shares once it falls below my strike and then buy them back once it bounces back above it and do so for a small loss every single time that occurs. And so this morning, if you come back to the monitor tab here, you can see I went through 1, 2, 3, 4 cycles of Snapchat bouncing through my put strike. And finally, it did fall back below my strike one last time. And so far, it has remained below 55 and gone lower. But again, as you can see here with the prices, every single time this happens, I'm going to lose money. For example, with these 2 orders right here, if I short the 200 shares at a price of $54.79 and then buy them back at a price of $55, I'm going to lose 21 cents per share. Times 200 shares, that's a loss of $42. Not a big deal, but again, if this kind of thing happens, these small losses can start to add up. And this kind of thing actually happened on Monday as well, I believe. And what I did on Monday, if I come back to the trade tab, and I apologize, I was not able to record this adjustment I made on Monday. But at that time, what I did was I stepped in and sold the 62 strike call option here. And actually, I sold 2 of these contracts to match my 2 put options. And at the time when I did that, I sold both these 2 call options for $115 in additional credit each. So in total, that brought in $230 of additional credit. And I could use that $230 to offset the losses I was incurring from having to repeatedly short and buy back the stock. And then unfortunately this morning, as I just showed you, it's been happening again. So as a result, I had to roll down this call option now to the 58 strike. And that move is what you can see coming back to the monitor tab. That move is what you can see right here with this order. So I bought back both contracts to close of the 62 strike call option and then sold to open 2 more contracts of the 58 strike call. And in doing so, I took in even more additional credit, which amounted to $81 per contract. So again, times 2 contracts, that's another $162 of credit. And given that this morning I've lost about 160 bucks from having to short and buy back the shares multiple times, that means this adjustment here totally canceled out all these losses. Of course, the main caveat here with doing this is now I do have a short call option at the 58 strike, so should Snapchat reverse, right? If Snapchat down here reverses from 52 bucks per share and blows through my call strike, then at that point, I'll have to start buying shares of stock to cover my call option, but we'll cross that bridge if I ever need to. If Snapchat just keeps moving on lower, then no big deal. Or if it just goes sideways, then again, no big deal. And then also, in order to actually keep that extra 162 bucks of credit, or as much of it as possible, I will have to be in this trade all the way to the expiration date, which is only about 3 weeks away at this point. But still, 3 weeks is a decent amount of time for other stuff to happen, for other things to go wrong. And of course, if more things do go wrong, then I can still make one final adjustment by rolling down my call option or rolling up my put option to the same exact strike, and therefore turn my short strangle into a short straddle. So definitely a bit frustrating here, but even with all this carnage with the stock trying to screw with me, I've still been able to keep my overall net credit on this entire position in line with my profit target. I still have over 300 bucks of positive credit for this Snapchat trade, so therefore there's no need to get worried yet. I'm just playing a lot of defense at the moment. And actually, because of these adjustments I've made this morning with moving down my call option and then finally shorting one last time the 200 shares of stock, my Snapchat position, which you can see here, is actually up by about 116 bucks today. So that just goes to show you that defense, your trade defense, is incredibly important because this allows you to potentially turn around a losing trade into a winning trade. Of course, you can't always do that, but it definitely is possible. And so with that said, I don't think I'm going to make any more trades today. My portfolio here is pretty much fully allocated. I don't have that much more free capital to use. So until one or more of these trades comes off for profits or losses, I'm simply going to have to manage what I have on for the time being. Okay, welcome back. I hope you enjoyed those few clips there. And so now finally in this video, let's go over the few adjustments I made this morning in EWZ and GDXJ. And then also I'll briefly go over all my current positions. So starting off first with EWZ, let's come back to the charts real quick here and go to EWZ so you can see what's going on with this one. Move this down a little bit and I'll zoom in. So after this most recent bounce in EWZ, just like we've seen many times before, it once again did not last very long, and now EWZ is turning back down lower, and perhaps it might be on its way to making new lows. So unfortunately, with this ETF being down again today, it is now below my put strike. Let's come back to the trade tab here. And so right there, you can see my naked put options are at the 30 strike. And like I was saying, with the ETF now at a price of $29.49, it's obviously below 30. And therefore, that order that you saw on the monitor tab here, this was to short 300 shares of EWZ. And I will continue to hold on to these short shares as long as EWZ remains below 30 bucks per share or below my put strike. So basically, this is the same kind of thing that you saw me doing earlier in one of those clips with Snapchat. And also very similar to Snapchat, EWZ has bounced through my put strike quite a few times as well, causing me to lose money every single time. And that's why also I had to step in and sell an out of the money call option. So now at this point, my position has converted from simple naked put options now to a short strangle, where I'm still short the same 30 strike put options, but now also short 3 of the 31.5 strike call options. And again, the whole point of doing this was to take in extra credit to compensate for losing some money from having to repeatedly short and buy back the shares multiple times. So that's EWZ. Now let's come back to the monitor tab. And also, as you can see, I sold to close 200 shares of GDXJ. Now, GDXJ is a gold miners ETF, so it does follow pretty closely the gold market. We'll come to the charts for that one real quick, GDXJ. Now for this position, I have had to make some adjustments in terms of moving my strikes to collect extra credit, but I made those adjustments a little while ago. So the current state of this position is I am short the 44 strike call options, which are right around there, 44 strike calls, and also the 43 strike puts. So a very, very narrow short strangle here. And as you can see around this zone, for a time, GDXJ was above my call strike of 44. So that's why I was long 200 shares for many, many days. And then it looks like in the past 3 days or so, GDXJ has turned downwards. And finally this morning, this ETF broke back down below 44, below my call strike. And that's why I had to sell and get rid of those 200 shares. So at the current moment, GDXJ is right in between my two short strikes with only a $1 difference between them. So I will have to keep a close eye on this position. because should this ETF break back above 44 or break down below 43, I'm going to have to take some action, either buy the shares back again or short the shares depending on what it does. But also time is starting to run out for both my GDXJ position and also my EWZ position. There's only about 3 weeks left to the expiration date in November. So hopefully I can just keep hanging on to these positions, managing them the way I need to, and potentially still eke out some profits by that November expiration date. That's still totally possible. And so with that said, we'll come back to the monitor tab here and we'll take a look at my Snapchat position. And so nothing has changed here since I showed you that clip of me having to make all those adjustments. So I'm still short 2 contracts of the 55 strike put options and also still short 2 contracts of the 58 strike call options and still short 200 shares of the stock itself. So basically once Snapchat broke down below 55, so far it has remained below 55. Although yesterday there was a pretty significant rally for Snapchat, it got pretty close to rising back above 55 but fell a little bit short, and now today it is falling back down lower again. Very nice. Again, with my approach here, of course, I would like to be directionally correct on my trades from the beginning, but if I'm not, as you've been seeing, I can either short or buy shares of stock to totally compensate for that and still make a profit, but the main thing I don't want to have happen is for the stock to continually bounce through either one of my short strikes. So that's why even though Snapchat is below my put strike right now, at this point, I would love to see this stock continue to push lower and lower and lower, just move as far away as possible from my 55 strike here. So that's Snapchat. Now we'll come down to my strangle category and we'll look at my AMD position. So this one here is still looking really, really good. No adjustments on this position yet. And overall, I'm up on my AMD strangle by $180 right now. So still a ways away from hitting my profit target, but after only a couple of days of having this position on, in particular over an earnings announcement, obviously as you can see here, those earnings allow me to get a very nice head start on this position. Now what about my Crocs short strangle? Let's see here. Also no adjustments yet, still short the same 2 options, 120 strike put option, 160 strike call option. Now this stock for a time did breach my 160 strike call. Specifically, it bounced through the strike 2 times and I did lose about 70 or 80 bucks. Not a huge deal considering my total credit on this position started out as well over 500. So therefore only losing about 80 so far. No need to make any adjustments in terms of moving my strikes yet. And this was also an earnings trade, but unfortunately, if we come to the charts real quick here, let's go to CROX. The reason why this position is not very profitable at all at the moment is because it has been hanging out right around my short call strike. So as you can see down here, this was the earnings announcement back on October 21st, it looks like. And Crocs did gap higher and push even higher after that. And like I said, now it's just been basically hanging out right below my call strike. And specifically right here with these 2 candles, that's where it pierced my call strike 2 times. So basically I will need a pretty nice down move in the near future to actually start making some decent money on my Crocs position here. We still got a very nice collapse in the implied volatility after those earnings came out. You can see that. And this definitely helped to offset the losses I incurred on my call option when the stock got really close to its strike. But overall, I still definitely need my deltas on this strangle to get balanced out a bit more. So coming to the trade tab here, this is my call option. It has a 46 delta. So this is actually very high. And if you look at my corresponding put option right here, the delta is only 2. So again, even though the implied volatility crush certainly helped to offset the losses I incurred on my call option once Crocs made its move, unfortunately, the losses on the call option were still too great to make any decent profits on the strangle so far. So fingers crossed for a small downturn in the near future. And now we'll come back. And we already talked about my GDXJ position, so I'll move on to my NUE short strangle. And fortunately, no adjustments and no losses at all yet on this position. The only downside is just like my Crocs position, NUE is pretty close to my call strike at the moment. And you can see right here, the current trading price for NUE is just below 112 bucks per share. So not that close to my call strike, but still close enough to where I'm only up on this position by $47 as of right now. So definitely a long ways away from hitting my profit target on this one because I am trying to make at least 200 bucks on this strangle here. And then finally, we have my Twitter strangle. This was also an earnings trade I made earlier this week that you saw. And same thing, no adjustments and no losses yet on this position. But with this trade here, so far, I'm only up by about 24 bucks now. It has come down a little bit since I made that earnings trade. The reason for it is Twitter has started to continue moving lower. So we'll come to the charts real quick here and zoom in. So there we go. After the initial big push down lower from those earnings announcements, we've had 2 more following back-to-back down days. So basically in an opposite fashion compared to my Crocs and NUE position, Twitter here is now getting very close to my short put strike. And if you recall, my put strike is at 52.5. And as you can see right here, Twitter is currently trading for 53.30. So still not alarmingly close to my put strike yet, but obviously it's pushing it. The good news though is we are still seeing a continuation of the IV crush. So the day after those earnings came out, IV fell down to right around here, around 47%. And 2 days later, it's now down further to about 42.7%. And I don't expect to see the implied volatility contract too much further, so therefore I will need a directional move in my favor here to start actually making some decent money on this position. If Twitter can just stage a nice short-term bounce in the next few days, that should be all I need to maybe make 50% on that short strangle and get out for some nice profits. But of course, we'll just have to wait until next week and see how things actually play out. And with that being said, that's going to do it for this video. I hope you enjoyed it, and please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading or stock market investing, then check out my SKILLSHARE courses, links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.